Hello, welcome to Any Answers Answered for December 2022. No doubt in the very near future, the pages of Any Answers will be filled with self-assessment queries as we start to look towards January. But this time, Tim and I have picked out two corporate tax questions. And our first question, Tim, comes from Harpsong. And the question is about running two trades in one company. Quite simply, what we're saying is, am I correct in saying that two separate trades under one limited company is no longer an issue after April 2017? Losses can be offset, says Harpsong, from one trade to another. And this is a very important point, of course, Tim, because since George Osborne made those changes, lots of things we got used to are no longer true.
Yes, the reference in the question to April 2017 is clearly a reference to the significant relaxation of corporation tax loss relief that George Osborne introduced for losses arising on or after the 1st of April 17, in addition to what all of us were taught at school and what has applied since 1965 when corporation tax was first introduced, in addition to sideways relief setting the trading loss against total profits of the company, including capital gains, of the same accounting period in the previous accounting period, it is now, and has been for over 5 years, possible to carry forward any unused loss and set it against total profits in the future. Now, that means that if a company is operating two separate trades, as the original poster suggests, and one makes a loss, the other is profitable, then even if the loss cannot be absorbed entirely in the current and previous accounting periods, it can be carried forward and offset against the other trade's profits in subsequent years. And that basically was the point, subject to the usual conditions and so on. Just having a look at some of the responses. At the time we're recording this, there were only 5 responses. And yeah, I think probably there's nothing huge to add from the responses, but one of them at the end says nothing changed in 2017. You've always been able to claim sideways relief since 1965. Well, quite right, but only for current and previous accounting period. What changed was that the carry forward used to be against future trading profits from the very same trade. So that wouldn't have enabled the loss to be carried forward from one trade and set against profits of the other trade, but now you can. And I should just add that that very generous relaxation of the loss relief rules for companies extended to group relief. And if there's a group of companies, then a loss-making company can carry forward its loss and group relieve it very flexibly. And it'll be particularly interesting next year when we've got differential corporation tax rates. It can be group relieved against the profits of other group companies in a later accounting period.
I was speaking to somebody recently who was in that Treasury team with George Osborne at the time, and we were discussing this area, funnily enough, and saying that there was one reason that they were able to introduce more generous loss relief rules, and it was the removal of all of the marginal tax issues. And the point being made was that there's no way you could run the marginal tax rules we had, and now have again, with that loss relief rule, because it just becomes too complicated. Well, we will find out, no doubt, over the coming months and years, just how complicated some of that will be with carry forward and carry sideways. It could be carnage. Time will tell. Our second question comes from D. Hughes 1975. I immediately like D. Hughes on the basis that I suspect we have something in common. And the question is to do with capital allowances on electric vehicles. Question is, they've bought an electric vehicle, claimed the first year allowance at 19% tax relief. 12 months down the line, they're going to sell it, but at that point, the tax rate will have gone up to 25%. So D. Hughes is saying, buy a car for 50,000, we're looking at £9,500 of tax relief. Sell it for £40,000 at 25%, that's £10,000 of tax coming back. Tim, the question we're basically asking is that possible?
Well, yes, we are. And what the original poster says at the end of his question or hers seems unfair. So feel like I must be missing something or calculating incorrectly. Well, I'm afraid, D. Hughes, as I've often said to my various children over the years, when they say, it's not fair, Daddy. No, darling, life isn't fair. And the sooner we learn that, the better. And yeah, that's life. If you've got a change in tax rate, then that is exactly what's going to happen. So the calculations were not incorrect, although I think in the original posting there's a suggestion that the tax cost of the balancing charge would be restricted to the 9,500 tax value of the original claim, whereas actually, as one of the posters eventually points out, it's not the tax cost that's restricted, it's the original cost that was brought into the calculation that was restricted. So if you've had relief on 50,000 and you sell it for 60, you would only bring in 50 as the deemed consideration. But anyway, that's a minor point. But yes, I'm afraid the tax cost of selling it a year later would be 10,000, so 500 quid more than the tax saving that you had. But that is just the way it works. Of course, that 25% is going to be the main rate of corporation tax. It's not at all unlikely that a company like this is going to be caught between the 50,000 and 250,000 lower and upper thresholds for the small company rate next year. And between those two thresholds, there will be a marginal rate of 26.5%. And so the balancing charge could in fact be, oh dear, I'm going to have to work it out in my head fairly quickly, 26.5% of 40, which is going to be 54, is it going to be 10,800, I think? Something, but anyway, it's going to be even more. So, yeah, and it's not just companies, of course, that might be subject to this apparent unfairness. Suppose that the business is operated as a sole trade and the profits are of the order of 130, 140,000 a year, but you claim tax relief on some sort of capital expenditure this year and get relief at your top income tax rate of 40%. But next year, with a similar level of profit, if there's a clawback, at that level, you're going to be a top rate taxpayer at 45%. So there's a similar prejudice there, but nothing we can do about it.
And there we have our summary of tax for the year 2022, I think, in many ways. Nothing we can do about it, and tax isn't fair. Hopefully, it's been a very interesting year, of course, 2022. We look forward to joining you in 2023. Who knows what fun and games we will have then. Have a wonderful Christmas, have a happy new year, and Tim and I will see you, all being well, early in the new year. Bye-bye for now.